Municipal budgeting is not very different than basic home budgeting. However, I know many times many homes don't have a budget. It could be you were never taught or you simply have no interest. Yet as a public entity defined by law, a municipality has to have a balanced budget every year. This means that the expected revenue has to equal the expected expenditures for the entire year. Recently, there was a serious debate in the State House concerning the reality or fiction of a balanced budget. Mostly because it is numbers that come from a projection, and it is based on that expectation that nothing will change, yet sometimes things do change. However, this being said, I believe in the reality of a balanced budget versus trying to spend where there is no money at all to cover. I further believe that a budget should be used to expand as well as set limits. I want to use the example of a home budget to start with so we can all relate and be on the same page. In a home budget, we know that X dollars will come based on our salaries, that's the income. We know how much our bills are, that's the expenditures. And we can plan for a vacation based on those numbers and start to save for that awesome vacation. We then know if there is a surplus when there is a positive left over between the income and the expenditures. We call that expendable income, or income that can be used for anything. It could be to pay debt off or simply have a monthly date night. When there's a deficit, which means that a negative, once you subtract the expenses from the income, then that means you are spending more than you take in. The result can be anything from default on loans, the electric being turned off, the home being foreclosed, or even bankruptcy. The budget process gives you a clear picture of what is happening with the money. For a home budget, you don't need an accounting degree, but for municipal government, you almost do need one, as well as knowledge of what you are allowed to do and not do as a public entity. Let's first discuss the revenue sources. Every municipality per state law has the right to charge taxes for every piece of property in the municipality not exempted by the general law. The primary revenue stream for municipalities is property tax revenue. Municipalities may provide penalties not exceeding 15% for non-payment. A delinquent tax lien is a lien on the property enforceable by execution and sale in the same manner as for county taxes, which means you don't pay your taxes, then that property can be sold by the municipality in an effort to pay the tax debt. Title 5, Chapter 21, and Title 12, Chapter 37 of State Code allows municipalities to collect taxes in installments and to accept payments in lieu of taxes from nonprofit housing corporations. Municipalities can also exempt new manufacturing establishments from the property tax. Additions to existing manufacturing establishments, including machinery and equipment costing $50,000 or more, are also exempt. However, this must be done by ordinance, which means that the municipality is controlling how much and how long that will be in place. The property tax for the municipality is determined by the millage rate. For Lyman, it is one of the lowest in the state, 0.05460. The millage rate is in addition to the county tax millage and the school district millage if applicable. Understanding millage is key to understanding our municipality. Here's how it's computed. The second tax revenue for the municipality is the business and occupational tax. Municipalities may levy a business license tax based on gross receipts of any business operating within their boundaries. Lyman does have a business license ordinance in place, and the fee is based on the gross receipts of that business for the industry that business is involved in. Some businesses and occupations, however, are fully or partially exempt from the business licenses tax by state or federal law. For example, a wholesaler delivering goods to retailers in a municipality is not subject to the business license tax unless the wholesaler has a warehouse or a mercantile establishment within the municipality. I would encourage you, if you are in business or desire to start a new business, to review the law or speak with an accountant versed in tax law for businesses. The third primary type of revenue stream for the municipality is service charges and fees. Municipalities can levy service charges. Title 5, Chapter 7, and Title 6 of Chapter 1 depict the rights and some of those fees. Utility fees are often referred to as service charges, computed on the quantity of service received. For linemen, for example, SJWD is a service charge based on usage, and that goes to the municipality. There are other branches to the tax and levy section of the revenue, but it is beyond the scope of this course. And I would encourage you to research more to get this clearer list of this section. Another unrestricted revenue stream, which is all too familiar, is the fines and forfeiture section of revenue. Title 5, again, Chapter 7, and Title 14, Chapter 25 gives municipalities the ability to set fines and penalties for municipal ordinance violations. This is done via an ordinance, and municipal courts may impose a fine, imprisonment, or both. The penalties cannot exceed $500 and/or 30 days. All add-on fees and assessments are added to the fines set by the municipal judge. Municipal courts can accept payment of fines, fees, assessments, court costs, and surcharges by credit or debit card. The court may impose a separate fee to cover the cost of accepting payment by this method. The municipal court must promptly remit all fines and penalties to the municipal treasurer. Another revenue stream is the government local fund. This fund is essentially the state giving back to the municipality from its funding. Per Title 6, Chapter 27, Section 55, no later than 30 days after the end of the calendar quarter, the state treasurer distributes 16.722% of the local government fund to municipalities. The treasurer distributes the money to individual municipalities based on their population as compared to the state's total municipal population. There is also inventory tax, homestead exemption, and the state sales tax, of which was put in place by the state with the intent of paying all school operating taxes and owner-occupied homes. Because owner-occupied homes are not charged the district tax millage, they are exempt for school district taxes. All of this makes up the unrestricted revenue, or generally referred to as the general fund. This is the money that comes in that can be used for all the operational expenses incurred by the municipality without reservation. But then there is the restricted use revenue. These are funds that are earmarked for a specific purpose and can only be used for the specific reason. X amount of money will be used for X needs and nothing more. It is reserved and cannot be transferred into the general fund or intermingled with it unless allowed by the fund's law. For example, the state accommodation tax. The state imposes a 2% local accommodation tax and credits the municipality or county in which it is collected. The municipality must allocate the first $25,000 and 5% of the balance of it to its general fund, which makes that portion unrestricted. It must use the remainder for tourism-related activities. If the amount exceeds $50,000, the council must appoint an advisory committee to make recommendations on the expenditures or how to use it. Title 6, Chapter 4, Section 25 depicts the requirements of that committee. Local accommodation tax. County and municipal governments may impose a local accommodation tax by ordinance adopted by a positive majority of the entire governing body. A county government may not impose an accommodation tax exceeding 1.5% within a municipality without consent by resolution of the municipal council. The cumulative rate of the tax may not exceed 3%, and council must use the tax proceeds for tourism-related projects and programs as listed in Title 6, Chapter 1, Section 530. Municipalities and counties that collect more than $900,000 in statewide accommodation tax can only use the revenue for operating and maintaining capital facilities eligible to be built with the local accommodation tax funds. So this means it cannot be used for new rugs in the municipal hall, but it can be used for other buildings or construction that is tied to the tourism. All other municipalities may use up to 50% of the revenue for operating and maintaining facilities which are eligible to be built with local accommodation tax funds. And there's the local hospitality tax. Municipal governments may impose a local hospitality tax on the sale of prepared food and beverages and dining establishments. If doing so pursuant to an ordinance that was adopted by a positive majority of the entire governing body, a local hospitality tax must be levied on the sales of prepared food and beverages and in establishments licensed for on-premises consumption of alcoholic beverages, beer or wine. The cumulative rate of the tax may not exceed 2%. And just like the accommodation tax, municipalities and counties that collect more than $900,000 may use the revenue for operating and maintaining capital facilities eligible to be built with the local hospitality funds. All other municipalities may use up to 50% of the revenue for operating and maintaining facilities that are eligible to be built with local hospitality funds. Municipal Improvement Act. Under the Municipal Improvement Act of 1999, municipalities can set up a special improvement districts and assess property owners in the districts for improvements and services. A municipality may not charge properties assessed at 4% for improvements or services without written approval of the property owner. Tax increment financing. Tax increment finance law establishes a comprehensive procedure, and oftentimes even difficult to understand, for authorizing the redevelopment of blighted areas within the city. Private developers and municipal bonds retired by the property tax increment finance the redevelopment. A comprehensive plan and feasible study must be prepared, notice issued, and public hearings held. The redevelopment project may be located outside the redevelopment area if council determines that the project would benefit the redevelopment area as a whole. Title 31, Chapter 6, 1976 South Carolina Code. The Victims Assistance Grant Funds. These funds are provided by the state to help victims of crime in the municipality. It can only be used for select items or services in law enforcement. The list is restrictive and long. If you'd like to learn more, do a search for the words Approved Guide for Expenditures of Monies Collected from Crime Victim Service in Municipalities and Counties. You'll find a PDF that will list the authorized expenditures for this restricted fund. Now again, this is not an exhaustive list of revenue streams to the municipality. It is solely to give you an idea of some of them and the use of each. I reviewed the analysis done by the town's accounting firm and see some of these in place and some which are not. But now, understanding this is June when they present the budget for public hearing, you can review and see what is being done with knowledge.